Hello there, my friends. Chris Marcus here with you for Arcadia Economics and have an update on Fortuna Mining as they did have earnings before the open today and another strong quarter, which certainly is coming at a great time with the rally in the gold and silver markets. And fortunately, to dig through the results, today we have Luis Ganoza, the CFO of Fortuna Mining, joining us. So, Luis, great to have you here. First time we've had you on the show, but will be great to hear your perspective and welcome on in. How are you today?
I'm very well. Pleasure to be here. Thank you.
Well, it's good to have you. And of course, joining us also is my favorite mining stock analyst, Dave Kranzler of Investment Research Dynamics. Dave, how are you today, my friend?
Doing well, thank you.
Well, good to see you. And also Rafi Farber, who does our Friday show and talks about Fortuna quite a bit. So, Rafi, good to have you here, and thanks for making some time. Good to see you, my friend.
Thanks for having me on the call.
Well, I appreciate you being here. And Luis, perhaps we can start you could share your thoughts on the second quarter where, pulling up the press release, we had increases versus the first quarter in net income, adjustable net income, cash flow from operations before working charges, free cash flow, and also gold equivalent production. So it seems like things went pretty well, and perhaps you could give us a recap of what happened.
Yes, absolutely. So as you mentioned, and as we stressed in the press release, it was a very positive quarter in terms not just of accounting income and EPS, but also in terms of free cash flow. We were certainly benefiting from the higher metal prices. In terms of our EPS specifically, and comparing against the prior quarter, there is no significant jump in EPS, but there are a couple of one-timers that were stressed during the earnings call earlier today. One has to do with just timing impact of taxes. We did talk about that. There is also a relatively large share-based compensation expense in the quarter. And we do have higher cash cost per ounce compared to Q1, but within what was expected and within it's sort of in the middle of our guidance for the year. So overall, I would say no big surprises, and we are quite pleased with the results in terms of our income statement. And in terms of cash flow, that's certainly the case as well. $38 million of free cash flow after all corporate expenses, after sustaining capital, and around $20 million of net free cash flow generation after all other capital expenditures, which includes the Ambassade, our new project, the Ambassade in Senegal, plus greenfields expenditures and the repurchase of the Franco-Nevada, half of the Franco-Nevada royalty at Séguéla for $6.5 million. So after all of that, $20 million net free cash flow in the quarter. And I think more important, as we've guided, we certainly expect that the second half of the year will look stronger in terms of free cash flow generation, particularly towards Q4.
Okay, and we'll certainly touch on that as well. Although, would you like to go through the two one-time charges so we can walk through those now?
Well, one is the effective tax rate, which there is a deferred income tax recovery. It's a bit of an arcane, complex, a bit opaque accounting treatment that has to do with our offering of the convertible notes. If you just strip that away, the impact was a credit to our P&L of $12 million in the income tax provision line item. You strip that away, our effective tax rate was 39%. And what we've messaged is that that should be more in the range of 32-35% on average. And that's around 1 cent per share, 1 to 2 cents, additional cents per share on a quarterly basis, right? That's one item. And the other one was just the significant rise in the share price that it gets reflected in our share-based compensation expense, which for the quarter was quite significant, over $5 million, right? We typically wouldn't expect to see that on a quarterly basis. Something it should, on average, it should be something more in the range of $2 million. So those are two items to take into account, which are, again, of an accounting nature, right?
Right. Okay, and another thing that happened in the quarter is obviously the convertible notes deal, which you guys have used to pay off the $125 million revolving credit facility. Obviously, you were involved in the structuring of that deal. Anything you'd like to share on what you've learned in the months since then, and obviously anything leading up to the deal that people should know about?
Just in general, it's something that makes a lot of sense to us. There were two main drivers, and I believe as Jorge has shared his thoughts around this with you guys before, but worth emphasizing here that one is that terms were quite attractive, right? And that means that we were able to improve cost of capital, right? Even accounting for the equity component of the convertible, in our view, terms were attractive compared to the option of just straight bank debt. And the other one is also the fact that it is quite relevant for us at this stage of the company, given where we are today, to decrease our dependency of bank debt. It is a fact today that we, in terms of our capacity to generate free cash flow, we're heavily reliant on one jurisdiction and one single asset, right? Increasing flexibility through an option like a convertible makes a lot of sense, being less constrained by what comes along with bank debt, right? So our credit facility today is $250 million. That is scheduled to step down in October to $150 million. And we intend to amend the credit facility, extend it for another 4 years, and resize it in a cost-effective manner, leveraging on this added liquidity and flexibility that we've gained, right? So that is the plan. And outside of that, I mean, we also mentioned that with respect to the 2019 convertible notes, those were we had simultaneously with a new offering announced redemption. So at the end of the day, it's interesting that even though the share price was below the conversion price, there was a significant, around 80% or 75% of the convertibles were actually converted into shares, right? So our view around that is that those are holders of the notes that have I'll call it a long-term view, a bullish view of the company and of the stock.
Okay, well, appreciate that. And hopefully that's helpful to people watching, and certainly a handful of other topics on my list here, but would love to pass it over to our guests and let them have a chance to ask any questions. Dave, did you have anything ready to go that you'd like to run by Luis?
Yeah, and you may or may not know the answer to this question. I understand that there's solid organic production expansion going on at Séguéla, right? Increasing the throughput, et cetera. And it's running, I think, around 150% of rated capacity right now. But what do you guys need to see in terms of the size of the resource before you make a decision to actually physically expand the production capacity at Séguéla?
Sure, that's a good question, right? And a key one, of course. So at the run rate of the processing plant at Séguéla today, we have in front of us around 7.5 years of mine life, right? I would say that in general terms, I mean, once you reach 10 years life of mine, in terms of incremental resources, just as a broad guideline, anything beyond that, you should be thinking of expanding your production capacity, right? So that's just at a high level, that's how we would think about it. So in that regard, this Kingfisher discovery, this prospect Kingfisher, which we intend to convert into a resource towards year end, as was also stressed during the call, has the potential certainly to take us beyond the 10-year life of mine, right? So the implication of that is, depending on what we see at year end, that could open the door to potentially start talking about an expansion of throughput potential.
Okay. And I think I heard correctly on the earnings call. There's a plan to release a maiden resource estimate for Kingfisher by year end. And I know it'll be inferred, and I understand why. But is the timing on that year end?
Yes, I mean the estimate will certainly. We expect that the estimate will certainly be concluded around year end. The point in time in which we're able to release might be around year end, earlier or soon after, but that is within the expectation. Yes.
And then just one more quick one on Séguéla, and then I have a quick question on Lindero. So I know that you high graded the throughput to offset the outage. I think Jorge said is 19 full days of outage because of the electricity situation. And I mean, my eyes went wide when I saw 3.47 grams per ton. And that was versus 2.79 in Q1. What do you think? And based on the mine plan, what is a normalized number for grams per ton at Séguéla?
So, if I'm not mistaken, our average we're projected grade for the year is around 3 grams, right? Our projected grade for the year in the plan is around 3 grams, slightly above that, and we expect. There was a question around this on the call as well. We expect that the second half of the year we're going to see lower head grade with respect to what we've seen in the first half of the year as a result of the situation you described. And overall, for the full year, we are likely to end up slightly below our original plan for 2024, right? So when you look at it from an annual perspective, no big change, no significant disruption.
And then just really quickly, I thought of another quick one here. In terms of the financial effect of the outage series of outages, whatever, did high grading the ore offset the lower production, or was there any sort of marginal financial effect on Séguéla because of that?
There was certainly an impact on our cost per ton, as there are of course fixed costs that are now distributed among a lower number of tons in the quarter. So all in all, I would say our cost on a per ton basis, we don't disclose these numbers, but it's how we tend to measure the performance on a cost basis at the site, was managed to remain in line with the prior quarter, and very close to our plan, right? And that was as a result of the increased throughput. On a per ounce basis, that higher grade certainly allowed us to maintain a very competitive cost on a per ounce basis as well, right?
Okay. And then just really quickly on Lindero, I know that I think for the latest quarter, the all-in sustaining cost was a little over $2,000 per ounce, and that's obviously because of the capex for the leach pad. But I missed it on the call. What do you expect that number to come down to by the fourth quarter?
Yeah. In terms of AISC, in the case of Lindero, we've guided for the year. I believe it's somewhere in the 1800 all the way to 1950, if I'm not mistaken. What we're seeing today is a potentially closing the year in the upper end of that range. Capex is a big component in the year, as we've been stressing, as you correctly pointed out. But in terms of the execution of that component of capex, we have good visibility as to where we're going to end, within tracking very well with the budget, right? So we've talked about $64 million in the year. We don't anticipate any significant deviations on the capex portion. The OpEx, however, is subject to strong pressure from the appreciation of the local currency. Around 50% of our cost is incurred in local currency. And just to give you a sense of that, in our guidance, we had anticipated and incorporated around 20% appreciation of the peso in real terms, of course, based on projected inflation and devaluation. What we're seeing in Argentina is the government implementing a crawling peg policy in their management of FX as a way to anchor inflation. This is significantly beyond what we had expected. So inflation has been coming down in Argentina. I think the government, we can make a statement that on that front their policies are being effective. But nonetheless, the consequence of this is that the peso up to June had appreciated in real terms over 50%. If things continue on this trend, by November, it's going to be close to 70-80%. So that is in affecting our cost structure in dollar terms, right? So that's I'll say the main component that is putting pressure in our AISC execution with respect to guidance.
Okay.
Okay. So I guess, everything else being equal, when the capex is out of the way, let's say the peso stabilizes, what do you think on an ongoing basis the AISC should be or could be, or normalize out?
Yeah, absolutely. AISC at Lindero on a normalized basis should be in the 14 to 14.50 range, right? That's what we would expect at Lindero for sure.
Okay. Great. That's all I have. Thank you.
And Luis, how do you expect that to impact the overall all-in sustaining cost, factoring in what you mentioned about Lindero?
Well, in terms of our consolidated AISC, that is going to push our execution certainly to the top of the range we've guided for the year as well. On a consolidated basis, I don't expect nothing material or that significant, but it's going to push us closer to the 1650 for the year.
Okay. And just since you touched on it, before I pass it over to Rafi, you did have power issues in Burkina Faso and Cote d'Ivoire. Anything else that you should touch on there or want to add? And also in terms of, you talked a little bit about the production anything that you would expect if power is at full force in the third quarter that we would see any changes in production going forward based on that?
Sure. So let's see. In terms of power availability, to start with, we disclosed the latest information, right, based on what we see today, and that for Séguéla contemplates that since mid-June, approximately, we've been seeing mostly full power availability from the grid. So the issue seems to be resolved, and that's the messaging we've been getting from the government as well. In the case of Yaramoko, it's a similar situation. We're currently seeing pretty much a normalized situation. In terms of cost impact, at Séguéla, as we had disclosed before, we have mobilized to equip ourselves with full genset capability to fully replace the power grid if necessary, and that's going to be assuming full availability from the power grid, meaning gensets not working, just the fixed costs associated with having that equipment up there. That's sort of in the $3.5 million a year range, right? $300,000 approximately per month.
Okay. And Rafi, I'll turn it over to you now, and any questions you have for Luis.
Yeah, I just wanted to get a general sense in terms of the cost of mining. There's a lot of factors. I mean, I wasn't thinking of Milei's monetary policy as having a negative impact on you, but I guess in an ephemeral sense it does. But he's been doing a good job in trying to control inflation in his country, as we all hoped he would. But just generally, what factors in production are most under your control in terms of all-in sustaining costs, and which ones are least under your control? Just so we can get a sense of how you can improve things and what things are just acts of God or whatever.
Sure, absolutely. So I think a good approach to answering that question has to do with to begin with what we've seen in the first half of the year. We've been seeing some operational issues that have deviated us from our cost targets, which have to do mainly with low equipment availability on the mine fleet, particularly with loaders, and a couple of one-timer maintenance issues at the processing plant. So our capacity to deal with that has to do with, to begin with, a significant project we're undertaking that we're launching in the second half of the year. That has to do with replacing the existing fleet at Lindero with smaller size regular trucks, around 50 tons versus 150-ton trucks or 100-ton trucks that we have today on site, right? We have a relatively small fleet of, I believe we're in the 6 to 8 trucks. So we're gonna shift to lower size trucks, which have an important implication in Argentina. It's just so much easier in what is ultimately a non-mining country to maintain and ensure proper equipment availability, right? That's been a bit of a painful experience and lesson in Argentina. With all of the import restrictions, it's just hard to get on a timely basis the kind of spare parts you need for a specialized mining equipment fleet. So that is something that is a significant project that's going to imply savings for us on the OPEX, and believe it or not, on the CAPEX side as well. So with that project already launched, we expect that the issues we've had in Q2 will no longer be around. I mean, just going to the specifics, that means that for Q3, we're still going to be incurring some additional costs at the mine from rental of equipment to compensate for lower availability of loaders in particular. So as Q3 progresses, all of that, we're going to leave all of that behind. And and we expect to be in a much more comfortable position to I would say, rein in on any of these type of situations that are particular to operating in Argentina, right? As I say, with a specialized mining fleet. Those are some of the key aspects around our control. Other one-timers have had to do with certain key components of our processing producing line. Right? We don't expect any of that to be recurrent or to come back, see any of that coming back in the next several quarters. So in general terms, I'll say we're confident that any operational aspects we're leaving behind, but we certainly are exposed to these macro factors, which, right, we've expanded on. The impact of that is not insignificant. We expect that, and the current trend of appreciation of the Argentinian peso, that puts around $10 million of added costs in the second semester on our cost structure.
Right? Okay. And Rafi, anything else right now?
I'm good.
Okay. Luis, would love to touch on Kingfisher again. You talked about it a little bit earlier. It was an interesting comment from Jorge on the call this morning where he called it a remarkable discovery. And I know you have the drill program is ongoing, and perhaps you could I'll pull up the press release on that, and you could talk about what you guys have been able to learn so far there, and certainly anything you could shed on what has Jorge excited, I think certainly is something other people would love to hear about.
Yes, for the full geologic chat, you'll certainly want to invite Jorge and maybe Paul Wheaton, our VP exploration, in a future call. But at a high level, I mean, I'll just sort of repeat what has been messaged already, and sort of highlight what the news release, the press release, aims to convey, right? Which is that this is an important structure in terms of how far we see this along strike. As was mentioned, it's overall 2 kilometers where we have tested the extension of the structure with pretty much continuous mineralization, right? There's some very strong results with width and grade. We certainly will have to be careful there in terms of expectations around average grade for an eventual resource. So we need more information, and that's ongoing. The drilling program is ongoing. But it doesn't get much better than this in terms of early results, right? It's close to surface. Which allows us to potentially fit most of what we're seeing within a pit, within a modeling pit. So end of the day, I mean, there is an expectation that it is meaningful, right? How much in terms of tonnage, ounces, grade, we'll have to wait and see.
Okay, and curious, now that it's been a year that Séguéla has been in production, any thoughts, things that have gone how you were expecting, or anything that it seems like you've had continuously good drilling results, maybe it's been beyond expectations, but what would you say looking back on that first year of production there now?
You mean in terms of additional exploration or exploration success overall in the property? Is that the question?
Yeah, and just any thoughts based on what you've learned, that of anything that may have stood out in the past year that has gone better than expected than
Yeah, I mean, there are two key things here. One is the extraordinary capacity of the operations team, right, to squeeze further production from our initial investment, right? This has been messaged as well in the past. The mine contemplated, or the mine plan, the original the feasibility study contemplated an expansion, if I'm not mistaken, was at the beginning of year 3. So we pretty much we will be pretty much achieving the expanded throughput rate without any significant additional investment, right? So that's entirely the result of the excellent work done by the operations team locally, right? And that is not to be underestimated. That is a very significant feat with I'll call it material impact for Séguéla and for the company. The other aspect is certainly what we just talked about, right? Exploration success. The explorations team has always been very excited about potential discovery. And they have been just very good at keeping those discoveries coming, right? We saw Sunbird over a year ago, now Kingfisher, and they continue to test multiple targets within the property. It is, I'll call it the best place we can think of to spend exploration money today, right?
Yeah, and you mentioned Sunbird in there. Could you give us a timeline, or maybe not a timeline, but sequence of events until that we're looking at until Sunbird eventually goes into production?
So part of Sunbird is in the mine plan already. In the updated life of mine, there's a relatively smaller portion that has made it into reserves, and I believe it's around 200,000 ounces, if I'm not mistaken. And there is exploration work that is going on today to further test potential for an underground operation at Sunbird, right? That should continue throughout the year, and by year end as well, we should be in a better position to identify how much of the resource at Sunbird, which is over 700,000 ounce resource, whereas only 200,000 have made it into the reserve. How much of that additional resource can come into the mine plan through an underground mine design, right? Year end should give us a better view of that, a better sense of that.
Okay, and the other one, obviously, I'd love to get your thoughts on. You guys did have some drill results at the Diamba Sud project at the Caracara deposit, and perhaps you could just walk people through your thoughts on what you guys came back with there.
Yes, so here, similar story, very exciting results, but there's still further work to do. In terms of the interpretation of what we're seeing, the team is concentrating their efforts not just on drilling, but on providing a geologic interpretation that will be a key component particularly in this deposit, to be able to comfortably produce a resource, right? It is the expectation that we can achieve that by year end. The results so far are encouraging. I think that it's still an exciting exploration project for us, right? in order for us to shift the language and talk about potentially a development project, we need to continue the work and conclude this phase, right? So I expect that by year end, we can be more conclusive with respect to what we see at Diamba.
Okay.
It's still a bit early.
Okay. And of course, that is from the Chesser Resources deal from last year. And another question that I have, Dave, I thought you were going to ask this one, but I'm going to beat you to it here. Interesting comment from Jorge, mentions with the issue of the convertible notes, strengthens the balance sheet, and also the additional flexibility places the company in an advantageous position to pursue strategic initiatives and emerging opportunities. Anything that you could comment on, maybe not whether there's a particular profile you're looking for or something that might fit with what you already have with the company, obviously in the context of what you can talk about publicly, but anything you could share there, I think people would be interested to hear.
Sure. I mean, we can certainly share our view in general, right? First of all, I think it's a first statement that we're seeing in terms of the two regions, more potentially actionable opportunities on West Africa than on the LATAM side. What we're looking for is, as consistent with our track record, I believe, is projects that we believe can operate throughout the metal price cycle, right? It's not just projects that will work when of course, gold or silver are at right above $2,000 and at $30 silver, and that ultimately projects on which we can make sense of the price we pay, right? Whether it be cash or whether it be with shares on a relative basis, right? If you're paying with shares, you have to be. It has to be the case that you are getting as much as you're giving away, right? As a minimum. That's how we approached the Roxgold transaction at the time. We believe it's paying off nicely. And in terms of overall philosophy, that's how we're approaching it, right? I'll say that, I mean, there's a varied, along the spectrum of the types of opportunities, earlier things, or projects that might be on a more advanced stage that might involve a cash component in terms of a potential acquisition. We see quite a variety in West Africa in general, much more, as I mentioned, and with respect to LATAM today. These things change over time, of course. Today, that's what we're seeing. And we are just very active in general, looking at opportunities to put cash to work and add further value, continue expanding our presence in either of the regions, right?
Yeah, that makes sense. And certainly I can imagine what you're saying about West Africa, given the success you guys have had there in the past 3 years now that it's been. So one last question for me, and then if Dave or Rafi have anything else they want to bring up, although I'd love it if you could comment on San Jose. Jorge mentioned on the call that he seems to feel the third quarter is really when it would be ideal to have a decision by. And I know there's not perhaps too much in the specifics that is new, but anything you could comment on San Jose, and also, and I know it's a similar timeline in what you're learning on the Yessi vein, but anything on those two would be helpful.
Yeah, I mean, I think Jorge did a very good job in terms of outlining the potential scenarios. And I mean, certainly one scenario with increasing likelihood is that the mine is brought to a closure. There are the other two scenarios, right? Where we put it in care and maintenance and decide to continue exploring. I believe he also mentioned, potentially seeing results that change the story towards the end of the year. I personally think that we're, in terms of likelihood, the first scenario at this stage, given with what we see, is a potential outcome. The exploration at YESI, we put out some of this information in the past, has shown us very exciting result from drill holes, but it has been kind of mixed results, right? So we will continue and conclude the work, go through the process as previously stated, and have more information. I'm sort of repeating the messaging of the earnings call. Unfortunately, there's not much more color or that I can expand on here. So we just need to be a bit patient. San Jose, overall, I think it's important to bear this in mind, is no longer, that significant in terms of value contribution to the company, right? So just to put things into perspective.
Okay, well, that's still helpful in terms of giving people an idea of what to expect there. And Dave and Rafi, any final questions from either of you guys today, or did that cover most of what you have on your mind?
I just had one comment to make with respect to Kingfisher, which again, I was like eye-opening. Jorge had mentioned on the earnings call that he thinks it's possible that Kingfisher will be the largest gold deposit on Séguéla, which, it's just remarkable, especially given that it was a blind discovery.
Yes, absolutely. If you read between the lines, right, with our earlier discussion there, Dave, around potential expansion of throughput capacity, if that turns out to be true in terms of that potential materializing, in terms of the size that Kingfisher eventually achieves, that would certainly take us beyond 10 years life of mine, right?
And just one more quick thing. I think it mentioned in the press release that you're expecting to be able to release a resource estimate on Diamba Sud in Q4. Is that still on track for Q4?
That is the plan.
Is that going to be a complete redo of what the resource estimate was when you acquired Chesser?
Yes, absolutely. It will be a redone resource based on our own drilling. Yes.
So it'll be measured, indicated, and inferred, I'm guessing.
I don't know that we expect what portion we expect out of that potentially in the indicated category. I wouldn't want to advance an opinion there. I would expect some of it to make it into indicated. Yes. What portion? I wouldn't be able to say at this stage.
Okay, fair enough.
Okay, well, what was on my mind is just something a little bit more general. Not many people know what's going on in the economies of Ivory Coast and Senegal. Just as someone who's operating there, how are things going over there? Are they connected to the West? Are they in a crash? Are they in a boom? How are things going over there?
In the case of Burkina, it's a very particular situation, right? The country is in a complicated position on the security front. There's a humanitarian crisis in certain parts of the country, as most people would be aware, and the government is certainly, in terms of from a fiscal position, it's also in a very tight situation, right? That is impacting mining companies, as the government the government, you would expect in such a situation to start looking for additional sources of income, and certainly the mining companies, they're starting to tap into the door of mining companies, right? So we're seeing different initiatives by the government to increase their intake of, I'll say, funding from mining companies.
Yeah.
It is a complicated situation. We have disclosed that at the end of Q2, we had $40 million of uncollected VAT receivables. We did see $1.6 million paid after 22 months of not seeing anything in recent days. We don't know whether that's a trend yet, right? But Burkina is certainly a different story from CDI. Overall, in CDI, I mean, there's nothing in particular that stands out that we would want to share or communicate. It continues to be a stable jurisdiction in terms of on a macro perspective, and in terms of what you would expect from a friendly, investor-friendly government. It is the case that the West African Monetary Union is going through a phase of, I'll say, diminished reserves. It is a bit tight today in terms of liquidity and access to foreign currency to achieve repatriation targets. But all that, and that's a function of a drop in exports from cocoa, right? From cocoa. So that all it means is that it's just forcing us to pace the rate at which we are repatriating funds, right? Cash surpluses. We don't see any potential risk that we should be flagging to the market, right? There are other large operators in the country, and we believe they see things similarly, right? So just in general, I mean, we feel very comfortable operating in CDI compared to many jurisdictions in LATAM, I would say today even.
All righty. Well, appreciate everything you've shared here today, Luis. Certainly is a strong second quarter, and congratulations on that. Anything in particular that you might want to add that we did not cover today?
I think your questions were quite comprehensive, so nothing I can think of. Just thank you guys for the invite. And I'm sure Jorge will be available for your next calls, but I'm happy to join you anytime.
Well, sure, appreciate that. And yeah, it was nice to have you on here, get a little bit of a different perspective. And again, a lot of good things happening, and certainly some good events on the calendar for the second half of the year to look forward to. So thank you, Luis. Thank you, David. Pleasure to see you as always, my friend. And of course, Rafi, thanks for joining us as well. So lastly, thank you to everyone at home watching, and appreciate that you have interest in what Fortuna is doing. And with that said, we're going to wrap up for today, but hope you have a great rest of your day, and we'll see you again soon.
Thank you.